In 2023, uncertainty remained elevated globally. In the first 6 months, inflation remained elevated and interest rates continued to rise. In the second 6 months, central banks paused while monitoring inflation trends and developing geopolitical risks. In South Africa, although inflation began to slow in the second half, interest rates remained high. Growth was constrained by electricity and logistics constraints, but there were signs of notable progress in the final quarter of the year. For the year ended 31st of December 2023, Standard Bank Group delivered continued strong earnings growth, higher returns, and increased dividends. Revenue growth was strong, supported by more clients doing more with us, higher interest rates, and increased client flows linked to market volatility. Despite inflationary pressures on costs, we delivered strong positive operating leverage. As a result, the group's cost-to-income ratio declined to 51.4%. The pre-provision operating profit reached 75 billion rand, up 27% on 2022. Credit impairment charges increased across all products. The group's credit loss ratio for the year increased, but remained within the group's target range. Headline earnings were 42.9 billion rand, and the return on equity improved to 18.8%. Our board has approved a final dividend of 7.33 rand per share. This equates to a dividend payout ratio of 55% for the full year. In 2023, all 4 business units recorded higher earnings and improved returns. Personal and Private Banking headline earnings improved by 27% to 10.7 billion rand, and the ROE increased to over 22%. The Business and Commercial Banking unit delivered headline earnings of 9.3 billion rand, an increase of 27% on 2022, and the return on equity improved to 37%. Corporate and Investment Banking headline earnings increased by 30% to 19.8 billion rand, and the return on equity was 22%. In 2023, we combined our long and short-term insurance businesses with our asset management businesses in a new 4th pillar called Insurance and Asset Management, or IAM. IAM headline earnings grew by 22% to 2.8 billion rand, and the return on equity improved to 13%. Analyzing our results by geography, our South African franchise saw balance sheet growth, margin expansion, and increased client activity. This was offset by increased impairment charges as clients took strain due to higher interest rates. Our Africa regions and offshore franchises both delivered very strong earnings growth and returns. These franchises are key differentiators for the group. In 2023, South Africa contributed 39% of group headline earnings, Africa regions 42%, and the offshore business 10%. While uncertainty is expected to remain elevated, our business is well diversified, growing, and resilient. In 2024, we will continue to support our clients, develop our employees, and deliver sustainable growth and value to our shareholders and all our stakeholders. We are focused on delivering against our strategic priorities, and we remain confident we will deliver on our 2025 commitments to the market. Thank you.